Campbell McCrary here, Amvest Capital in New York City. Welcome to the Amvest Capital Inc. live webinar with Bravada Gold. Bravada trades on the venture as BVA, Beta Victor Alpha, and as GBAVF, that's Golf Beta Alpha Victor Foxtrot on the OTCQB in the US. We do hope you'll enjoy today's program. It'll be available on demand about an hour after we wrap up at amvestcapital.com/replays. We'll also email it to you. Do feel free to chat in your questions. Just find the question button or the chat button or pane on the GoToWebinar control panel. Amvest Capital is a New York-based special investment management and corporate finance firm focused solely on the natural resource sector. Welcome back, everyone. And all important disclaimer, among many things, please read this carefully. This call is most definitely for informational purposes only. Have with us today from Bravada and the Manex-group, Joe Kiesis, who's the president of Bravada and is going to take us through today. And again, following the formal presentation, there'll be a Q&A session hosted, moderated by Amvest. We'd love your questions to be sent in, and we'll also be asking our own questions. So Joe, if you want to share your screen, making you presenter, and you want to turn on your webcam, and understand you've got some exciting drill results, some assays coming in. So why don't you definitely walk us through that, but there are a lot of people who don't know the story as well, so it'll have to hit both parties.
Yeah, okay, well, just, yeah, for those that aren't familiar with Bravada, we're an exploration company. We're focused entirely on gold and silver discoveries in Nevada, and you know, sort of the discovery to development end of the you know, the data or the you know, value added situation here. So what we're looking at here is one of our projects, one of our more advanced projects. And if you can go to the next screen, we'll show the obligatory forward-looking statement. You know, it's exploration, so a lot of it is future-looking. So when we look at the you know, the property valuation or the proposition for value for Bravada, what we're looking at is a portfolio of Nevada projects that we've been working on for about 18 years. And the idea that, you know, we initially started the company was looking at new discoveries. They're, you know, they're becoming harder and harder to find worldwide, but, you know, in general, our more scientific, very persistent approach, some creative thinking and trying new things, you know, we thought there was a real opportunity. We focused on Nevada because it's always been one of the top rated regions in the world for not only mineral exploration, but development and mining. So we've maintained a series of projects, sort of a portfolio approach, just like you might do if you had a, you know, group of high-risk juniors. You might want to distribute your risk a little bit. We do that the same sort of thought process for our projects. We've utilized a hybrid joint venture model. We've had a lot of partners over the years. In general, we try to find a project partner who will add something to the project. You know, money is of course one consideration, but also skill set. You know, we've had a bias towards trying to get mining companies, so we have someone that can bring in the mining expertise. You know, if we're fortunate enough to bring the project forward to that stage. And of course, we can add value to the company by doing a number of things. You know, there may be a takeover, find something, a big company comes in and takes you over. JV participation with a mining company, for example, have a minority, keep a minority portion. May spin it out if it's a good standalone project and we want to develop it ourselves. We can bring in, you know, the appropriate staff for production. You know, where, like I say, we're really focused on the early stages of projects to, you know, sort of the pre-feasibility stage, I'd say. So, you know, a lot of opportunities for adding value, you know, by that approach. So, next slide, please. Campbell. Okay, yeah. So, you know, there are a lot of types of deposits in Nevada, gold deposits, but we've really focused on two types, which we think have the best opportunity. The Carlin type, Nevada is the type area for that discovery. A lot of them have been discovered over the years. They're typical, most investors are familiar with them. They tend to be big open pits, although there's some very good high-grade underground mines that are being developed now, use a lot of equipment. The other type, though, is something that isn't probably as well known, and these would be low sulfidation, or some people call them hot springs type gold systems. And on the lower right-hand side there, you see an example of some material from the Hishikari mine in Japan. This is really one of the superior examples of this type of deposit. The average grade is something like 45 grams per ton. They've mined already something like 7 million ounces, and there's a similar number of reserve ounces that are remaining. So what's useful to understand about this is over the last 20 years, if these were sticking out of the ground, they were mined, right? So they're big holes in the ground or underground mines that have developed and taken advantage of that. But what's been known over the last 20 years is that these things are actually zoned so that if you do have the surface of these deposits preserved, they look something like what Yellowstone Park might look like today. There are geysers, center pools, that sort of thing. What's interesting is that these are typically barren or nearly barren. So today, underneath the Yellowstone geyser, there's almost certainly a gold deposit that's forming of some grade, obviously not economic being in a park or having boiling water. But by looking at modern examples and kind of working our way back to historic values, we see that there are a number of these type of deposits, and some of these features are preserved that are now fossil. Center pools and that sort of thing. So next slide. This is an example from one of our projects called Highland. You see the center towards the top of the slide there. And then there's quite a bit of difference, but in general, it's barren near the top. There are areas where there's boiling occurring, and that causes rapid deposition, and you get these spectacularly high-grade deposits. So sometimes the mineralization comes up close to the center. Oftentimes, though, it's 200 meters or maybe even more before you actually start getting economic amounts of gold. Our one hole that we drilled at our Highland project, and we had 12 meters of 7 grams, 108 grams gold with some 50-gram material. So this is the kind of stuff that we'd like to develop more of. Next slide, please. So, a lot of people ask, well, why am I interested in these type of deposits? They're typically very high grade and very high margin. So you're not moving a lot of material, has a small mining footprint. Oftentimes they're very clean ores. And what's maybe more important from an exploration geologist standpoint is once you understand some of the ore controls, you can add ounces pretty fast. So this is some material I took out of the 2001 Meridian website. It's now Humana, but they were mining gold at $45 an ounce. I think the initial production was from an area that was extremely rich, and their production costs were something like $25 an ounce. They were making new discoveries. And when we look at this time slice, you see 1996. I was there in 1995. They had made the initial discovery in an area about like this, which wasn't very extensive at that point. They had the Quebrada Orito vein. As they discovered or did more work on some of this area in the initial area, they discovered that there was some disseminated mineralization, but under a certain elevation, they had high-grade veins, and they followed those down. They made the discovery at Quebrada, Colorado. That significantly changed this deposit because this is 1 million ounces in 1 million tons material, 1 ounce ore, basically. Once they recognized that there was some elevational control, they saw that this bottom of this 1996 Quebrada Orito vein actually was downdropped by a modern fault. When they drilled underneath their initial drilling, which was barren, they ended up making a discovery called the Quebrada Orito Sur deposit, the southern extension of that. So that was 20 years ago. What about today? So if you take the next slide here, we can see what Hecla has done recently. This news release came out the middle of May. So this is the Midas district here. You can see in the center of this this photo here, there's a pond, there's a red star. That's where the mill is. They've been mining this Midas vein system, and it's pretty, pretty large, complex vein system since about 1997. There was some much older historic mining as well, but the modern mining started about 1997. So, 23 years later, this past December, they drilled a hole on a little center exposure over in this area here where you see the other red star. It's called the Green Racer Center. There's a little bit of gold in it, I'm told, and their first set of drilling, 5 ounces of gold over 13 feet. There are a number of drill rigs on the property right now outlining this and turning this into ore. So that's 2 miles from the portal, and it still took 23 years. So these things, can be really nice deposits and can produce new deposits on a regular basis. Next screen, please. So, this is the sort of thing we're looking for, high margin gold and silver deposits in Nevada. And, when we look at it, taking on a project, we look at the acquisition terms. So they're, sufficient that if we decide to bring in a partner, our shareholders still benefit from that. We currently have 10 exploration development projects in Nevada. Our Wind Mountain Flagship, we're going to talk quite a bit about because we just finished a 17-hole drilling program, and so I'll talk about that next in some detail. We discovered a barite deposit. We sold the rights to the barite to Baker Hughes. Sometimes in Nevada, because it is so well mineralized, you stumble across something else that is not gold or silver, and so we'll flip that to someone that can make some benefit for it. We have had a number of companies looking at a project. We recently did a deal with a little company called Headwater Gold. They're a group of people from largely from Kinross is where I know them from. They have a lot of experience in these low sulfidation vein systems. So they're expecting to be drilling probably this week or next on our Highland project. And some of those targets were things that we've developed over the years. We had a partnership with Oceana Gold, and unfortunately they decided to move out of the US and focus on their existing mine properties exclusively. So they turned back the property, but we had some pretty interesting targets that hadn't been developed. So this is going to be a real benefit for Headwater. We're looking forward to that. If we look at the, why Nevada, there's some facts here. Most of you know about these, so you can take a look at the slideshow at your convenience. But Nevada's a great place to find things, and there are a number of different trends. The Carlin trend is well known. Battle Mountain Eureka trend is probably also well known, and the Walker Lane trend has had a significant amount of production over the years. The next slide shows the properties that we currently have. Campbell, there you go. So Wind Mountain up to the top, we've got assays coming in. We'll talk about those. Headwater is going to be drilling our Highland project. Kinross had our Baxter project, a number of drilling episodes, three periods. There's a little oxide resource that they've discovered. We think there's still some more potential, whether it's Kinross type size or not, remains to be seen, but it still has some pretty interesting, exciting exploration potential. East Manhattan, we have some nice intercepts from previous drilling. It's kind of on hold right now. And then we have a number of other projects that we'll talk about in subsequent presentations, I suspect. So let's talk about our Wind Mountain project. Next slide. So it's a past producer. It's our flagship. You can see the Wind pit here, the Breeze pit here. There's historic production. There's an established resource that we've put together. It included some exploration drilling, quite a bit of exploration drilling that hadn't been fully mined at the time they shut down the mine because of low gold prices. We did a pre-feasibility on a portion of that at $1,300 gold and $24 silver. That was 2012. And obviously prices are higher, so we're taking a look at what those economics could look like today. Not only because of the gold price and silver price that that have come up, but also because we've added some ounces, which are not in the resource yet. The kind of the reason we picked this project up initially and why we still are pretty excited about it is the feeder zones for this disseminated mineralization in these low sulfidation systems. It's not too dissimilar to the story at El Peñon. There was that low-grade disseminated mineralization, and when they drilled deeper, and they found there was an elevational control, and some of these high-grade veins occurred, and then you start chasing those, and next thing you know, it's an underground mining opportunity. And there are a number of examples of that sort of scenario. So we're excited about what there's potential for high-grade feeders underneath the oxide resource that we already have. Next slide shows some of the historic figures. About 300,000 ounces out of these two pits. That was production at 1.8 million ounces of produced silver. Right now, resource combined, something in the million ounce range, 25 million ounces of silver. See some of the economics, these need to be updated. Next slide. So I'll let you look at this at your leisure. Some of the grades here, fairly low grade, but it has a number of things that make this deposit economic. One is a good recovery from the oxide material, very, very low strip ratio. It's in a part of Nevada that doesn't have any sagebrush, so there's no sage grouse habitat issues. Anyway, a number of interesting things that make it worthy of trying to find how to upgrade this thing. So one thing we can do, if you look at the next slide, we see the sensitivity. This is the base case, which is $1,300 gold, $24 silver, and you can see that just by increasing the cash flow, up to something in the order of prices that are similar today, there's a pretty big uptick. Sometimes the operating costs go up similarly, and capital costs. Apparently, that's not the case right now, but the main issue here is if we can add some more higher grade material, in my view. And so that's what we've tried to do. So if we take a look at the next figure here, one of the reasons we do these early PEA studies is, can you get the next slide up? Yeah, thanks. So one of the reasons we do these is to figure out what we should be doing next. So this is a slide showing here in transparency the topography. The red blocks are indicated ounces, so quite a bit of the resources in the indicated category. Yellow is the inferred category, usually not as well drilled. And you can see that when we put the $1,300 pit, which is the one that was the PEA was done on, you see there's a little saddle of, or a little tail of mineralization. You see there's not very many drill holes that define it. This is an obvious spot where we've made this discovery of what we call the deep min deposit. It turns out we thought it probably connected up with the breeze mineralization. We filled in these holes later in 2012 after we did this study, and we've added that, yellow blocks basically in here. We haven't upgraded or updated the resource, so it's not in the resource at this time. The other thing we look at is the area that's been modeled by the computer, and make sure that it's there aren't some holes in that. And we did find some holes in it, and we put in 13 holes to fill those because we think those are areas where we can get better grade than the overall grade of the that the model was looking at. So the next slide. So you see the area that we've already filled in. We just now completed some infill drilling, 13 holes in here to try to upgrade this a bit. So we have half of those holes that have come in. We'll talk about those. This area down here is pretty interesting because there's some geologic features that suggest there's a feeder zone in here. There might be others. It wouldn't be unusual to have a series of feeder zones through here, but this one's pretty interesting because it has some of the classic textures which tell us how far down we have to go to get to mineralization and to that 200-meter elevation. The other thing is that, as you can see, when you look at what a $2,000 pit does, it really doesn't change this too much. It's pretty well outlined. Go on to the next slide. Back to there you go. It's added this mineralization in here into a pit. It's made a small pit in here, a couple of small pits in there. So you can see that, you know, with a little bit more work, we can potentially take some additional mineralization here. So this feeder zone is interesting for a couple of reasons. One, it can expand the pit potentially into that area. So we want to do some additional drilling. So let's take a look at this area first. Next slide. So what we did is 13 holes in the resource and expansion area. And I say expansion because some of those holes were on the edge of mineralization. And so we stepped off to see if we can extend those, you know, along strike. So those would be adding either brand new ounces or upgrading the ounces that are there. And then 4 holes are in the vein zone. That's basically what we discovered in December of last year. That's the feeder target area. So next shot. So here's the Breeze pit. This is the north end of the Wind pit down here, just off screen, the dumps. So the stars are where we have holes now. This cluster up in the just due south of the pit. There's 1 hole we're still waiting for here, 130, and then these 5 holes down here. Next slide. So these are our results. And before I talk about those in much detail, so the in-pit resource have these grades, 0.377 grams of gold in the indicated category and 9.8 grams silver. So, you know, we've got nice thick zones. These are 21 meters up to 42 meters, 50 meters, 67 meters. And, you know, you can see the grades, gold grades are quite a bit higher. There's a pretty high grade zone here that matches some other historic holes. So that's pretty exciting. For example, those type of grades were surrounding this hole here. This is from the bottom of the pit. This is what's left behind, but you know, there was quite a bit of higher grade material that was taken in the last stages of mining just before they shut down. So in general, these first 7 holes have shown what we thought was the case, that there's a you know, much higher grade part of in particular the Breeze mineralization that you know, we could use geologic projections to add some good quality ounces. So the next site or next hole, then next slide, there we go. Okay, so this is the pit basically. This is a geophysics feature, shows a big structure kind of trending to the northeast. This is the tail of resource blocks that I pointed out in the overview. We knew that there was a structure in here. There's some historic condemnation holes. One of them had some pretty nice mineralization. You know, in here, little bits of pieces here and there. But we did a series of drill holes here, 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 and then one final hole underneath this hole in here. So there's a lot of low grade, sort of leach grade material in here. And when we came across this structure just to the east of it, we ended up intersecting a very high grade silver. This is quite a bit higher than we typically see in the Wind Mountain pit and in the holes around it. When we looked at the chips, this is not oxidized, it's not a supergene enrichment. There's actually silver sulfides in this hole here. So, and it's in a vein, and there's almost no veins in the material. So this is, we think, one of the feeder zones, whether it's the main one or whether it's one of many, we don't know yet. So what we did in 2021 is to do 4 holes here. We drilled underneath our first hole here. Fortunately, this one ended up flattening instead of drooping like they normally do. So we do have a bit of an offset. It's not as much as we had hoped. This hole is between 2 of our better holes. We hit some nice sort of mineralization, but we didn't cross the fault here. And so we put a hole kind of in between those. That I'll show you some photographs and what that looks like. And then because of this mineralization, when we took this projected strike, this ended up projecting right on our projection of that mineralized feature. So we decided to put a hole roughly between these, here this 1 point, data point, and then these data points down here. And so we're still waiting for the results there. Let's go on to the next slide. And it'll show a cross section, kind of what we were trying to do. So basically, this was the original hole. This one flattened a little bit. Hole 117 came in and crossed the fault a little bit farther away. And it's unfortunate because we can't see some of the slides here, but nice banded veins, this banded quartz against the wall rock here. This is a pretty interesting chip in here that's about 2 centimeters across. This is a band that's about a half a centimeter wide of quartz and disseminated pyrite. This black band in here could be sulfide, it could be a selenium mineral. Wouldn't be surprised to see some silver values in there. And then the typical really delicately banded vein on this side here. There's a bit of quartz after calcite texture here. That's an indication of boiling. So, nice textures. If we take a look at the cross section, this is the elevation of the steam heated alteration. It's eroded right over our drill pad, but off to the east, it's preserved in the low hills. You look 200 meters down, that's about where we should be getting into the boiling zone, and that's what these textures are telling us. So we're excited about the drilling. Waiting to get the assays. Next slide, please. So we're at this stage right now. We're evaluating the drill assays. Like I said, they come in sort of batches right now. We send in one batch of samples. That was the first 7 holes. We received the data. We've partially evaluated those, but we're really waiting for the second batch to finish up the area around the resource and incorporate that into our 3D model. And then, of course, we're waiting for the the results from the feeder zone to see what sort of additional offset drilling is worthy of this area here. Looking at the quartz mineralogy, it looks to me like we still need to go deeper on this, and the fact that there is a banded vein is pretty exciting. One of the things we do see is that even in the resource areas where you get the sort of thick zones of decent mineralization like we hit in that hole 107 or 109, sorry, that may indicate that we're near a feeder zone, because there's a lot of fairly low-grade material between the feeder that we have identified and in that area. So it's likely there's another feeder zone under there. So we'll be taking a look at that in 3D and then perhaps getting some drilling on that feature as well. And then, our goal here is to upgrade the PEA, get a new resource update, and depending on the market and the, treasury and that sort of thing, then, we may end up doing some additional metallurgy, engineering, and to bring it to a feasibility study. So, it's got a pretty good fast track. So for about $2.5 million, takes about 3 years. We think we can probably get a phase 1 pit permitted. So there's the potential for some near-term production, and that's a pretty attractive feature. Next slide. So I think Campbell mentioned that we're part of the Manex-group of companies. They do all the background sort of backroom type things, accounting, a lot of the legal work, that sort of thing. We've got a pretty strong board with different backgrounds, legal, business, engineering. This is one of the companies that was in the Manex-group when I first started working with them, and it was the Western Silver Company. Made a nice discovery called Penasquito. You can see that long-term sort of flat share price, started making the discovery, and then when it was obvious that it was really big, they continued on and were taken out at a very nice premium to Glamis Gold. Glamis Gold was then almost immediately taken over at a nice premium, primarily because of the Penasquito deposit. by Gold Corp. So, those that got in early did extremely well. And that's what we're hoping to replicate with our programs as well. Next slide. So a little bit of a, kind of background here. We've been taking a hit like many of the juniors right now. Market cap is way less than $10 million for over 1 million ounces in a resource. Number of shares, that sort of thing. So you can take a look at that at your leisure. And I think that's the time for questions.
Sure. Thank you very much. Again, the assays just announced, do they include the holes targeting the feeder zone, or is that still to come?
That's still to come.
But yeah.
Yeah, no, it did not. That did not include those. So basically, we only have those holes that I showed you that are on the north. Well, they're just south of the wind or the breeze pit. So they're between the breeze pit and the main wind pit. So they're infill drilling. It's an area we expect was going to have better grades. Question was, whether it extended or was cut off by a fault. Doesn't appear to be to the area that we've tested it so far. If it is cut off by the fault, that fault would upgrade up. We know it uplifts it in that eastern area, and that would make the feeder zone even more attractive. So, on one hand, I'm happy to get that nice thick zone of decent grade, but following that deeper, I think is a pretty exciting target right now.
How much cash do you have?
We're pretty low right now. We're down the fumes, so yeah, we'll have to do a financing here pretty soon.
Okay, and then some general sentiments wrapped in questions about, there's been a PEA on Wind Mountain since 2012. Partners have come in and out, walked away. Shares of a lot of shares have been issued. Can you kind of point out how at a high level what are you doing differently now?
Yeah. Well, I mean, you saw the chart for Western Silver. Those are years.
Yeah.
So it does take some time.
So we have an impatient investor, and that, so if you were talking to that gang, then with your
what's
long
different
time.
now is that we've really made a big step forward when we drilled those 4 holes in December. And so if we can understand the feeder system, which, is really hard to tell when you're that high up above, where it's not been eroded as deeply, there aren't too many places where it clues. So if that northeast orientation, which, we thought should be an important control, we've tested that on a couple of big faults that are modern and they're not mineralized, they're all post-mineral. But here's one that's mineralized. So, now we can go back to places like in the breeze pit there. Most of the holes were vertical. Our holes a lot of times were oriented east-west or west to east. And so if you have something that's trending in the same direction, you're going to more than likely drill right next to it, right, rather than cross it. So we're going to have to go back and look at the 3D modeling and see if there are any indications that, we should be drilling to the southeast in those areas, specifically to test those deeper vein systems that should underline this disseminated mineralization. This is a huge area of mineralization, like 4 kilometers. It's not likely one feeder came up and it's spread out along that zone, right? There's probably others.
What did you say the strip ratio was on Wind Mountain?
It's 0.6 to 1 for the resource that they put together. If you look at just the phase 1 pit that we were looking at, we're thinking that we might get that down to maybe 0.3. So there's not much material there. It helps that the mineralization's on a hillside and then, uplift to part of the topography.
Why not move forward with a shallow open pit plan to generate cash flows at current high gold prices versus the 2012 PEA gold prices that were used?
Yeah, well, I mean, you'd still have to do an independent PEA, and that's what we're going to do. To make sense, to make it most economic, we had to fill in these holes here, and
Mhm.
which we've done now. So the cost of doing that is, $150,000, something like that, and it's going to change um, the geometry and the economics. So why not spend that money first and then do the economic study after it? So that was the argument.
Okay, thank you. I'm going to pass this over to Adam, Senior Analyst in our Research Department. And unmute yourself, Adam.
Yeah, thank you. Joe, maybe just briefly outline what the results of the PEA, and and what you envision, the more recent drilling, will have added, in regards to the size of the project as can be outlined with current drilling.
Yeah, I think we haven't tried to upgrade the entire resource area. We focused on a higher grade, shallow part of that resource with the idea that if we can upgrade that phase one pit, we could get that permitted as a fairly small operation. It might be, maybe 500,000 ounces or something like that. And, get that underway, get it permitted. That's where a lot of the funds are going to come in, and we've done some test work where you have to be careful because it's not 43-101, right? But, there's some indications that you could take a smaller mine and make as much or more money. So that's kind of what we're looking at here is to, make a nice economic deposit and then worry about the size later as we, expand upon it. So it is somewhat of a bootstrapping type of an idea, but you want to start out with enough that you get a good cash flow. Ideally, what we do is we find these high grade feeders. We start the phase one permitting and as a starter pit, and then while we're doing that, which that's going to still take 3 years in Nevada. And so, you start doing the offset drilling and start outlining some of this high grade material. In the feeder target, we're still in open pittable range. We're talking about only maybe 100 to, 100 to 200 meters below surface. And some of that material is going to be, it'll pay to get itself out of the way. You wouldn't go after it by itself because, the profit's not there. But if it's in the way, you're going to take it, you'll leach it, and it'll pay for, keeping the strip.
And Joe, what have you been able to tell so far about, as you're hitting some of the deeper zones, is it still, is it sufficiently oxidized to be leachable, or you're going to have to do a concentrate and ship off to somewhere else?
Well, what we've drilled with the 13 holes is just in the oxide. And, I've broken out, if you look at that chart there, I've broken out the oxide as like leach grade, the main zone of mineralization. And then there's an underlying zone that's lower grade, but it's mixed oxide. So, you may or may not take that if it's in the way. So you can see, but, the areas that I highlighted there in the magenta, those are nice mineable widths of oxide mineralization. They are overlain by a lower grade material. Maybe you stockpile that, for later years. Depends on, some engineering thoughts that we haven't really worked through yet. As far as the feeder zone, it's not oxidized, and I don't expect it to be. We're looking at banded veins that we're going to want a mill. So, we're looking for grades that are 3 to 30 grams.
So maybe the thought process there is, just mine that material, and if you have sufficient grade, truck it over to Midas for processing.
No, I think there's no reason why there wouldn't be enough material there to justify putting together a mill. It's a big system. it's relatively low grade, but you know, it is really quite a large epithermal system, and I just can't believe that there's not some significant feeder zones in there. And we may be surprised. We may find out that they're, you know, quarter of a meter of, you know, that we're just flushing fluids right through them. That seems unlikely because we are seeing hydrothermal breccias, even in the drilling at the level we've just completed. So what that means is it's sealed up and it had to build up enough pressure to explode its way through. And that tells me there's a pretty good chance that, you know, you're going to get some fractures and, you know, mineralize a much wider area.
Mm-hmm. Joe, how many epithermal low sulfidation systems in Nevada have been big enough to justify their own mill?
Many of them, you know,
Yeah.
Midas. Let's see, you know, I'm thinking of North America. You know, Rosebud had a mill for a while, and let's see, you know, Fire Creek, they're shipping to the Midas, which isn't too far away. I mean, you know, it's a trade-off. I mean, do you build a mill? A mill's not all that expensive. This is not all that complicated. We're not talking about having sulfide ore that we would have to, you know, somehow oxidize. You know, this is coarse gold. You grind it up and you float it. You know, you get rid of all the material, do a cyanide leach on it. So it's not incorporated in the sulfides in general for these low sulfidation systems.
Mm-hmm. Yeah.
You know,
So
in
yeah.
the main oxide mineralization, we see a negative correlation between pyrite and gold.
Mm-hmm.
You know, there's a pyrite halo outside, but you know where the gold is, it's along lead fractures. That's why it leaches so.
Yeah. Yeah. Well, we know the sometimes this stuff can be refractory. You know, I guess for the most part, you know, Nevada epithermal deposits. You know, look, Fire Creek. You know, they're dealing with refractory ore. And you know, for the most part, yeah, it should be pretty simple stuff. But you know, you still need, if it's not leachable, you still need to have enough material to justify a mill.
Well, I think the vein zones, I mean, that is the target there we're looking for underground. Now, maybe you take some of that with an open pit or off the bottom of an open pit, you know, going underground.
Mm-hmm. And what's the land status there? You guys own 100%?
Mm-hmm. Yeah, there's a royalty to Agnico Eagle, who we acquired the property from. It's 2%. We can buy it down to 1% for $1 million anytime prior to production. There's a small package of claims that have a 3% royalty. There's an AMR payment. There aren't enough ounces that will ever, you know, I mean, our advanced royalty payments will be covered already. You know, they will already cover that. But it's in a prime location for a facility. So, you know, it's critical for us to get that ground.
Gotcha. Let me pass it back to Campbell to see if there's any more questions from the audience.
We just have one more. Are you currently collecting a royalty from Baker Hughes on the barite deposit? And if so, how much is that?
Yeah, that's a good question because
who is that? So
yeah, well, Baker Hughes is an oil field company, and they produce barite for the oil fields.
Mm-hmm.
So one of our target projects that we acquired was a gold target. It's on trend with some other gold deposits. We drilled some holes, and you know, it's just too deep for us to pursue right now. We noticed that there was a barite bed that was sticking out of the ground. And there are 3 mills for barite in that part of Nevada. So that's an area where the Battle Mountain Eureka trend overlaps the Nevada barite trend. And so we sold the barite rights to Baker Hughes. And the reason was they've been mining for years off of their Argenta deposit, and they're running out of ore. So they have a deposit that's adjacent to our ground. They're going to be mining that, and then they would extend that mining onto our ground. Now they were planning on mining a couple of times now, and the gold price or the oil price dropped, and so they keep pushing it back, and that's where we are right now. Oil prices are going up, so you know I expect that maybe they'll start start their permitting process again. But they were very close to getting their mine permit from the BLM, and they just kind of shut the doors, when oil prices dropped. So yeah, we don't get anything right now. What it is, it's $1 a ton. So we'll get a small amount over several years, maybe several $100,000 for several years, maybe a total $1 million, $1.5 million, something like that. So, it's not, it'll help run the company.
Mhm.
And it doesn't cost us anything, right?
All right. Want to thank everyone for tuning in. Please share your feedback on your way out or email it to us later. When we email you, the on-demand replay will be available in about an hour, and you can always access it as well as at amvestcapital.com/replays. I'll turn it back to you, Joe, for a closing statement.
Yeah, well, I'm pretty excited. The program that we've done on Wind Mountain, we have a lot of projects. All of them deserve some work, and so it's kind of rewarding to finally get to the stage where I think we've made a nice step forward on Wind Mountain, and and I'm happy to see, and I'm excited to see what Headwater is going to do, because some of those targets are ones we've been wanting to drill for quite a while. So this fall, I guess we'll start seeing drill results from their program as well. So I think it's got a good 12 months ahead of us. Looking forward to it.
Thank you. Good day, everyone. Till we meet again. Bye.
Thanks everyone.